Hey everyone, and welcome to today's explainer. Look, if you're an upwardly mobile Nigerian who's totally ready to upgrade your daily commute, swapping out the hustle of battling the elements for some sweet air-conditioned comfort, but you don't want to completely wipe out your savings, well, you're in exactly the right place. Today, we're unpacking the Tokunbo Buyer's Blueprint. We're going to see exactly how you can leverage smart financing to actually get the keys to a high-quality second-hand car in your hand.
Here is our agenda for today. 1. The Tokunbo Dream. 2. New versus used loans. 3. Top Nigerian lenders. 4. Essential requirements. And finally, 5. Fees and fine print. Let's get into it.
Section 1. The Tokunbo Dream. Mobility without breaking the bank. Having a reliable car absolutely changes the game, right? It transforms your daily life, your comfort, and honestly, your professional image. But let's be real for a second. Brand new cars require a massive amount of capital, and that just doesn't make sense for everyone. So, the elephant in the room, the question I hear literally all the time is this. Can you actually finance a Tokunbo car? We all know banks love financing those shiny new vehicles fresh off the lot, but are they actually going to back a car that's already seen a few miles? Well, the answer is a resounding yes. Financial institutions actually really respect this move. To quote the experts here, owning a car is a significant milestone, but buying a second-hand car is an economical alternative. It's structurally supported by major banks. And frankly, letting someone else take that initial massive depreciation hit from buying new, it's just a brilliant money move. Moving on to Section 2. New versus used loans. Understanding funding limits. Now, while banks absolutely will finance a used car, they do treat it a bit differently than a brand new one. Just look at the sheer contrast in the funding limits. Over at Axis Bank, for example, a loan for a brand new car can go up to an astonishing 200 million naira. But if you're buying a used car, that ceiling drops to 70 million naira. Now, don't get me wrong, 70 million is still a massive chunk of change that can easily secure a premium SUV. But it clearly shows how the bank's risk threshold shifts when the asset is pre-owned. So, why the big difference? Well, it basically all comes down to asset valuation and risk. Lenders typically will only finance up to 80% of a used vehicle's valuation. Plus, they enforce much shorter loan tenures because, as we know, older cars depreciate faster. It's like a race against time for the bank. They need to ensure the outstanding loan never exceeds what the car is actually worth, just in case they ever have to repossess it. And keep in mind, while a shorter repayment window clears your debt faster, it's definitely going to bump up your monthly EMI. All right, Section 3. Top Nigerian lenders. Who is approving loans? If you're a salary earner or a business owner with steady cash flow, these are the heavy hitters actively fighting for your business right now. Access Bank brings that massive 70 million limit to the table, with floating interest rates between 20 to 25% over a maximum of 48 months. Then you've got First Bank, offering a lower maximum of 15 million, but with a highly predictable fixed rate of 22%. And finally, Stanbic IBTC. They offer up to 30 million, requiring a 10% equity contribution from you, but they let you stretch the repayment out to an incredible 60 months. Actually, scratch that. Let's pause on that specific number for a second. 60 months. That standout metric from Stanbic IBTC gives you a massive 5-year repayment window. Stretching a loan out that far drastically reduces your monthly payment. It keeps your cash flow super flexible, making sure your dream car doesn't accidentally turn into a monthly financial nightmare. On the flip side, we absolutely have to highlight this 22%. This is First Bank's fixed interest rate. In an economy where floating rates can suddenly shoot up and completely wreck your budget, locking in a fixed 22% is a wonderfully predictable option. If you're someone on a salary who desperately needs certainty in your monthly expenses, this is a really solid play.
But what if you already have most of the cash saved up and you're just kind of short of the asking price? Well, FCMB offers these microloans for vehicle financing that range from 500,000 to 3 million naira for up to 24 months. This is literally the perfect top-up option. It's a quick financial bridge to help you close the deal without getting bogged down in massive long-term debt. Or, hey, if you want to skip the traditional bank entirely, you might want to look into Betaka Financing. This is a super interesting non-bank model because they handle the whole shebang. They sell the used cars and they finance them. You can basically walk onto their lot, pick out your car, and negotiate your financing with flexible rates up to 24 months, directly in one streamlined, one-stop shop experience.
Okay, let's look at Section 4, Essential Requirements Getting Approved. Time to ground all this excitement in a little bit of reality. If the car you're eyeing isn't a fresh import, but is already a Nigerian used vehicle, you're going to face some pretty strict approval realities. You're looking at a mandatory 15% security deposit, you absolutely must have a clean credit report, and you have to hand over all title documents up front. And notice this, they will strictly cap your repayment tenor to a maximum of 3 years. The banks just do not play around when it comes to risk management on older assets. So, to make this super clear, here is your chronological game plan. Step 1. Get your valid ID and rock-solid proof of consistent income together. Step 2. Make sure your credit history is spotless for that mandatory credit bureau report. Step 3. Round up clear, undisputed vehicle title documents. And Step 4. Be ready to open a brand new operational account with whichever lender you choose, so they have somewhere to disperse the funds. Honestly, preparation is the absolute key to unlocking this money. And bringing it home with Section 5, fees and fine print, avoiding surprises. Look, getting approved is awesome, but there are hidden costs that go way beyond just your basic interest rate. You've got to factor in all these extra charges. We're talking loan processing fees just for them to look at your file, documentation charges, and credit report fees. And definitely pay close attention to the bottom two. Check bounce fees are aggressively high, and prepayment penalties? Yeah, meaning the bank might actually slap you with a fee if you try to pay the loan off early to save on interest. Crazy, right? Always check these before you sign anything. And remember, lenders evaluate the whole picture, not just that beautiful car you want to buy. They are checking for monthly income consistency, job or business stability, solid work experience, and a clean credit history. They even factor in your age. Believe it or not, most lenders won't let your loan tenure exceed your retirement age, so having a holistic, healthy financial profile is absolutely vital. So what does this all mean for you? We've broken down the limits, compared the lenders, laid out the requirements, and exposed the fine print. Now the ball is totally in your court. Which lender aligns best with your financial flex to start your application today? Are you leaning toward the 60-month breathing room of Stanbic, the fixed-rate safety of First Bank, or maybe just that quick top-up from FCMB? Pick your strategy, gather those documents, and take that next step toward upgrading your commute. Thanks for hanging out with me on this explainer, and happy driving.